What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with the overall market, what's going on with Tesla, SPY, Nvda, the QQQ, and many other tickers. I want to talk about what the Fed just announced that's very important that caused the entire market to start selling off, and how this may affect the market going into tomorrow. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Weeble link, which is down below and in the description. If you sign up for Weeble, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon, it's in just about 7 days, so check it out before they run out. Anyways, let's break down what's going on with the overall market. So when it comes to the market, we ended up seeing SPY just trying to hold up for the majority of the day. It was actually green for most of the day, at least for the first half. And then what happened was after we saw the news come out about the Fed potentially pausing on the rate hikes, but possibly being open to more rate hikes for the future, right? The market ended up selling off just a bit, then it made almost a full recovery. And this was right before Jerome Powell ended up speaking. So the market was holding up quite decently. We were going to just wait for what Jerome Powell would say. Then Powell came and he caused the market to start selling off, and it just continued to sell and sell and sell, and it got very aggressive near the very end of the day. Jerome Powell caused another sell-off alongside the Fed after they announced some very important things. And this ended up translating across the entire market, from Tesla to Nvda. If you look at Tesla, it was holding up very nicely for most of the day. We got a very nice pump on Tesla. Then Tesla started trading sideways, got one more pump before Tesla really started to tank when Jerome Powell was speaking right about here. And then when Powell was speaking, alongside his reveal of many of the changes the Fed was going to make, it led to an even bigger sell-off, and Tesla ended up tanking pretty hard, going from almost 273 all the way down to 262. So that was a very, very big drop on Tesla. Same thing happened to Nvidia. Same thing happened to like Aapl and the entire market essentially. But the question is, how will the market move going forward? What on earth is going on? I want to talk about that first before I break down what could play out for tomorrow. So let me just mention that tomorrow, 1 hour before the market opens, we have initial jobless claims coming out. I don't think this is going to be that significant to cause some major volatility compared to Jerome Powell, but it could cause a small move. We're expecting 222 to 225,000 initial jobless claims, and we need this to be as expected. If it's too low, again, that's going to be very bearish for the markets, because once again, the Fed will be even more incentivized to continue to raise rates again. Now, when it comes to the Fed, we had some big news that came out from Jerome Powell himself. Basically, the Fed gave us the summary of economic projections, and this was very, very telling. So the Fed is telling us that they are incentivized to hold rates higher, increase rates, and then hold them up for a longer period of time than expected, because the economy is not contracting the way they thought it would. The Fed was initially telling us earlier during the year we're going to see some negative GDP quarters, and they're not really projecting it for this year as of right now. Now, could this happen next year? Most definitely it can, but as of right now, it hasn't happened for this year, and the Fed is now changing based off that. They also mentioned that inflation is too hot, and there's still a lot of work to be done as we're starting to see some signals of inflation upticking again. And the Fed told us that they're going to have to continue to remain hawkish as time goes on to start bringing the pain to the labor market. They made it as clear as possible. They mentioned that there's going to be more pain coming based off their projections. They actually have some numbers right here that show the unemployment rate. So maybe you guys could see this if I zoom in. They're projecting an increase in the unemployment rate. You guys can see it's like kind of uptrending just a little bit. This looks very small on paper, but this actually represents millions and millions of jobs. So this is going to be very important for the upcoming years, right? And the Fed is telling us that the GDP is also expected to possibly decline a bit. They're not really projecting a recession, but there are no guarantees about anything they're saying, because the Fed was also telling us things differently many years ago, right? So you can't always trust what they're saying, but at the end of the day, anything could happen. Many argue that we're already in a recession. So, like I said before, the Fed is giving us a different perspective, and I just wanted to talk based off what they're saying. They're also mentioning that it's going to take many years for them to see PCE inflation really reach their target. It may take many years to get there, as inflation tends to be very sticky, especially on the core side. And last but not least, when it comes to the Fed, they're not really projecting to cut too much next year. They're saying that there could be about 100 basis points worth of cuts. maybe a little less than that. It all depends on different factors. And the real cutting is going to happen more towards like 2025. That's when we see like bigger cuts to the Fed funds rate. So that's what the Fed is projecting. We're going to be in a higher interest rate environment for a longer period of time, and there's still pain that is likely going to come as a result of it. So with all of these changes by the Fed watch tool is now suggesting that the Fed is likely going to give us another rate hike in November, and also or maybe even in December. So one of those two we could be seeing another rate hike during one of those two. There's now a 28% chance of another rate hike in November, and this is starting to go up higher and higher and higher as the odds keep going up. And for December, it also went up a bit. There's now like a 40% chance of another rate hike by then. We're going to be watching to see if that ends up being the case. Now, if you look at inflation, just as a reminder, all items CPI starting to go up. This is partly because of energy, but also because of other sectors being affected by it. Whereas core is still very sticky. It's very, very sticky. It's still above 4%, which is still well above what the Fed wants it to be. So what does this all mean for the future? What does this mean for tomorrow from a technical standpoint? Well, unfortunately, when you look at SPY on the daily chart, we have a bearish engulfing candle, and that is another bearish signal. We could try to get a dead cat bounce. There's a real chance we're going to try to bounce just a teeny tiny bit to hit 440, but I think it's going to be very weak. And with the daily MACD turning bearish, I think there's a good chance that we either like get a tiny little dead cat bounce, then we just start selling off harder, or we just start selling off towards 436 or even below that. 436 is most likely on the table to 435, and if that fails us, we could be making our way down to the lower 430s. But watch 436 for tomorrow. There's likely going to be more downside. Please be very careful and watch that support as carefully as possible. Tesla's looking weaker. If you look at the daily candle, it's looking relatively weak, getting this big rejection, and we're getting closer to more contraction on the daily MACD. Tesla has this big gap down here, very close to this 250 area. I think Tesla's going to fill this over the next week or so. So I'm going to be looking for Tesla to try to rebound, retest like 265, then reject off that and start selling off, or it could start selling off for now. If Tesla breaks below 260, you're going to be watching 257. If that fails us, we're going to see more selling to fill the gap over the next couple of days. So there is likely going to be downside tomorrow, a little pop then a drop. So be careful and do what you have to do. For SoFi, also looking kind of bearish. We have a bearish looking daily candle, bearish cross on the PPO. We could be watching this thing potentially come all the way down to the lower 8. 8 flats could be tested very soon. The Russell 2000 is broken below 180, and we have this head and shoulders like pattern that has developed on it, which could start to bring this thing much lower as we're currently sitting at support. We're going to be watching this support at 178. If that fails us, this gap down here could get filled around 175. There's likely more downside for the Russell, and there is likely going to be another like domino effect as a result of that. If you look at Aapl, for instance, Aapl has this daily head and shoulders right here with the bearish looking engulfing candle simultaneously. Apple's looking weak. Look for a little back test of 176 for another rejection for it to start tanking towards the 173.5 area. It's now really looking weak, and it looks like the Fed had its big effect. The Fed is causing a big change in market structure. This will likely perpetuate. For the QQQ, it's looking weaker, very bearish looking engulfing candle. Looks like it's going to start selling off. We're going to be watching this thing come very close to 361, especially if we break below 363. It looks more bearish nonetheless. Nvda is looking weaker as well. If it ends up breaking below 420, we're going to be watching 416, and then below that, 410, and then 403 and 400 are all possible targets. In my opinion, it could backtest like 425 to 430. I wouldn't really say 430. I would say like 425. Reject off that and start selling off towards 416 and maybe even 410 very soon. It's looking weaker. Even Microsoft got a big bearish looking engulfing candle. Look for a backtest of about 320. This zone right here, so 321.8. Could test that, then reject and start selling off towards 318. Maybe even fill this gap down around this 316 area. So it's looking weaker. AMD is looking weaker too, unfortunately. We got the rug pull thanks to Powell. We're currently testing the 200 EMA. If this breaks, it's going to be sinking into the 90s. 98 could be tested. It looks weak as well. Looking at SPX, we're currently sitting at a very critical zone. We have this head and shoulders like pattern that's developing on it on the daily charts, and you can see it's looking weaker now. I'm going to be looking for it to backtest 4410 before this thing starts dropping. And I think it's going to lose 4400 very soon. This thing has more downside likely coming. Looks weak. That's, it is what it is, right? Not a whole lot to be said about it. One thing that's not so good for the market would be the fact that the VIX has closed. And I don't mean like not so good. I meant like not so good for the bulls. nothing is truly good or bad. It's just like I'm just referring to the bull's perspective because I know the majority of people don't really like to see their stocks go down. But anyways, what is more bearish for the markets? I'm going to use that term instead. Would be the fact that the VIX closed above the 50 EMA. That tends to be a bearish signal. If it keeps holding above the 50, this is when the market tends to be on a downtrend. When the VIX is above the 50 EMA on the daily, that tends to be when the market is quite bearish. And when we're below, that's when the market's like on a more larger scale uptrend. So now that we closed above this, if the VIX holds above 14.8 and keeps pushing and pushing, this will be a bearish signal as we have a daily bullish cross on the PPO. The VIX is looking like it's going to start pushing towards the 16 area, which could be bearish for the markets. That is most likely the case. The dollar came down, bounced off the 20 EMA, and now it's starting to push up. One thing I mentioned yesterday was that we had a possible inverse head and shoulders on the dollar, and this looks like it may end up playing out. So it didn't really play out as perfectly as it could have, but it still is possible. Now looking at this, we have this formation right here on the dollar making higher highs and higher lows. We're going to be watching 105.4. The dollar looks like it could continue to break out. So we're going to be watching that resistance right there, but it's starting to look stronger on the 4-hour time frame. 4 hours looking stronger, and then the daily is also looking a little stronger on the dollar too. It just looks strong. It's making higher highs and higher lows. The dollar keeps going. It's going to be bearish for the markets. Looking at Coinbase, unfortunately, we're about to get a bearish cross in the PPO. We're going to be watching 75.5 as support. If that fails us, 72 is on the table as it's looking weaker. Google is looking weaker. If this thing ends up losing 134.5, we're going to be watching this thing come all the way down to potentially this gap fill down to 132. That is on the table for Google, and we might see 132 being tested. Last but not least, or this is not the last one, but the penultimate one was Amazon. We're at the 50 EMA at 134.75. If that breaks, Amazon's going to be coming all the way down to potentially 132.5. And now, last but not least, we have Meta. Unfortunately, we got a bearish potential cross on the PPO. Meta got this big rejection thanks to Jerome Powell, and we have a bearish looking daily candle. So I could be watching it testing 295.98. If that fails us, then we could see this thing hit 292. So it's looking more bearish. Market looks bearish all around, unfortunately, and it is what it is. I know a lot of people don't like me saying that, but it's the truth. We have a bearish looking daily candle on SPY. The Fed has all this power to do things like this as they dictate our monetary policy. So it's best to just be prepared, best to be open-minded, and be prepared for what's about to come. I thank you all for listening. Do what you have to do, guys. Stay safe, take care, and I thank you so much if you listen until the end. Have a great day, and I'll see you guys in the next one. Thank you, and peace out.